Hi, Spencer here, and today I'm going to discuss what is the biggest trade-off in trading. Now, first, what is a trade-off? So the trade-off is when you have to choose between two different things, right? Ideally, you want both of them, but you can't have both of them, so you need to decide, right, like which is more important and which one you want to give up. So the most important trade-off in trading is the hit rate versus the reward to risk ratio. So the hit rate is the number of successful trades that you have. For example, out of if you make 10 trades and you win 7 trades, your hit rate is going to be 70%. So that is your hit rate. And your reward to risk ratio basically refers to how much you make when you win versus how much you lose when you make a wrong trade. So in this example over here, if you were to enter a trade over here, your target is over here, this amount is your potential reward. And if your stop loss is here, this is the amount of your potential loss or your risk. So if you were to take the ratio of the potential upside and compare it to the potential downside, that would be your reward to risk ratio. So for any trade, the higher the reward to risk ratio, the better the trade is going to be. So what exactly is this trade-off? So the trade-off is because you need to decide whether you want to take the trade early to maximize the profit potential, or you want to wait, right, to get a better confirmation so as to increase your hit rate. So the trade-off is ultimately between the hit rate and the potential amount that you can make on a trade. So let's look at an example. In this trade over here, this is a potential short trade because the trend is down. So at this point of time, you can actually decide where you want to enter the trade. So if you were to enter the trade at A, the hit rate will probably be less because at this point of time, there's not much confirmation. So as compared to B, if you enter at B, you will have a better confirmation because you have already seen two bearish candles come up. So if we're going to compare A and B, hit rate when you enter at B is likely to be higher, or there's a higher chance that the trade is going to be successful because you have more confirmation. However, if you enter at B, the profit potential, right, which ultimately leads to the reward to risk ratio, will be less because whether you enter at A or B, your stop loss is most likely to be somewhere around this area, and which is above A. So if you were to make your entry somewhere over here, so if you were to place your stop loss over here, your risk is going to be determined by where you enter the trade, right? And the later you enter the trade, the worse your reward to risk is going to be. So ultimately, in deciding for the trade-off, you have to decide whether you want to enter early at A for a potentially bigger profit but a potentially lower hit rate, or if you want to enter at B or higher hit rate but a potentially lower reward. So that essentially is the trade-off that every trader has to make on every trade. So so how do you make this decision? Or rather, some people have asked, like, what is the correct way to make a decision? So actually, there's no correct answer in this trade-off because ultimately it depends on your trading style. Your trading style will determine whether you are going for a higher hit rate or a reward to risk ratio. Right? For example, if you're like a swing trader and you want to go for larger moves, you're willing to sacrifice the hit rate, right, for a larger to reward to risk ratio. So for example, even if you make like 2 to 3 losing trades, but if you make one winning trade, you can cover back the losses for all those past trades and even make a profit. So at the end of the day, the most important thing is to really understand your trading style right, in the context of the trade-offs that you have to make. Right, so that's all for this video, and I'll see you in the next video. And for more videos and market analysis, please visit us at www.synapsetrading.com.